The road to glory is long. It's winding. And it's nearly all uphill. But the view from the top is extraordinary. Winning never comes easy. It takes late nights, tough negotiations, and a whole lot of blood, sweat, and tears. But the opportunities for growth are all around us. The deals being made here in Northeast Ohio enable us to reach out locally, nationally, and to companies around the world. And at the end of the day, we're in this together. What we do to make our region stronger. So let's show the world how we do deals in Cleveland. Welcome to the 2013 ACG Dealmaker Awards. Expectations. When you're a third-generation family business with a history of growth, they're big. Medina-based RPM International is a global manufacturer of coatings, sealants, and specialty chemicals and operates over 80 manufacturing facilities in 20 countries worldwide.
Vintage RPM deal is we negotiate with a family seller for years. They get to know us as much as we get to know them. And so it's certainly about value, but it's also about culture. Nearly half of our businesses today are still run by the original owner founder or a second or third generation family member.
Now get this, over the past 18 months, RPM has made 9 acquisitions in 6 countries with a combined revenue of almost $500 million.
We look really for businesses that will help us expand geographically. Certainly Viapol does that in a big way. We also look for product lines like Cinta that we can put into a Rust-Oleum business and really help accelerate their growth. The third way is just like Kirker, which is finding a unique business with a management team that will stay and run it, but puts us in a new market. And so those are our 3 good acquisitions, all of which happened this year, and really kind of highlight what we look for strategically.
Clearly, this bunch knows a thing or two about determination, and that's what makes winners. This is your Corporate Deal Maker Award winner. This is RPM International. Blue Point Capital Partners reviews over 400 opportunities annually, and in the past 24 months acquired 4 new platform companies, made several add-on acquisitions, and completed 4 divestitures.
We're trying to identify companies that we think have attractive growth potential with management teams that are generally capable of taking that business to the next stage.
We have a 20-year track record of helping businesses transition from entrepreneur-led to institutionally owned businesses, driving value in those businesses, doing what we say we're going to do.
While this firm maintains a global footprint, it continues to invest strongly in Northeast Ohio businesses.
Being regional, we get to meet and know the business owners here in our local communities and the lawyers and the accountants, and a lot of times we're aware of what a potential transaction might look like years before that business owner is ready. Sourcing regionally and being locally has clearly made a difference for us.
Of the 34 platform investments made across 2 funds, roughly a quarter are in Ohio-based companies.
One of the biggest highlights for us as a Cleveland investor was our ability to help a company in Twinsburg called QSR, which we exited over the summer. And we really helped them get on the map in China, which ended up being a big part of their business. PSSI is another company that we exited a little over a year ago, which was a successful investment for us and really helped that company more than double in sales.
Your private equity award winner is Blue Point Capital Partners. Now here are 2 companies that are being recognized for their part in a great transaction that hits pretty close to home. In July 2012, Mentor-based STERIS Corporation acquired privately owned U.S. Endoscopy. The acquisition simultaneously strengthened STERIS's core healthcare business and further positioned it for growth, while rewarding the impressive entrepreneurial spirit and accomplishments of U.S. Endoscopy's founder, Marlon Yonker.
We were looking for businesses in the endoscopy space.
The combination of our knowledge in endoscopy and their product line and their knowledge in endoscopy, it was a 1 + 1 = 3 type thing.
As a result, it allows us to combine our products. Some acquisitions are based mainly on cost reduction. Sometimes you can put two companies together and do it with far less cost. This is not one of those acquisitions, although there's some cost reduction here. But principally, this is a growth. How do we grow revenue faster for both businesses?
So when the deal was finally completed, there was just a mix of emotions that we all felt. We were so connected with the former owners of the company, the Yonker family, and realizing that that era was over. But on the other hand, it was pretty exciting. We could see the scale of the business we were joining. The reality is, the very next day we had a lot of work to do. We've known STERIS for many years. They're our neighbors here in Mentor, and we have a lot of respect for this company.
They put a real consideration into the fact that if we did the deal locally, that their local people would still have jobs. From our perspective, we would have done the deal whether they were in Cleveland or Southern California. But in terms of the integration effort, which is the hard part, it's just spectacular because we just walk across the street.
The deal of the year is STERIS Corporation's acquisition of U.S. Endoscopy. Ladies and gentlemen, please join me in congratulating this evening's winners.